Today, a little lesson about Fibonacci retracement in trading, and you will see that what I'm about to explain to you will give you a completely different perspective on Fibonacci retracement. I will show you how to draw it so that you do it correctly, not just that, but also your perspective on what these individual levels mean, 0382, 05 on 0236, and so on. This will now have a completely different clarity for you, especially in how you use it. You can use it in a 1-minute chart, 5, 15, 4-hour, or even daily chart, and you will see that these levels are almost perfectly tested everywhere, or you can use them for trend continuation. Because a Fibonacci, yes, is used in a trend movement, and you wait for a correction to then see where you could make a new entry during your short trend, as this is now drawn for short, for example, to take advantage of this short. And there is often the question, yes, unless you have a lot of chart knowledge, often it is not the case that the chart goes exactly to where support and resistance levels were. But let's take this example here, yes? We say we went up and down here and got our low down here. And now we have a swing high. That's what we're doing now, yes? This is our chart, a swing high and a swing low, and we have drawn this for Fibonacci. And now I want to explain something to you, and this will probably be the ultimate clarity for you. Down here we have the 0, which actually marks the beginning of a usual price development, the most recent price development in this case, yes? From a high or low, we're doing it now on a low. And what I want to show you now is, yes, the 0236 means nothing other than a 23.6% chance that the chart will stop here and reverse, yes, and continue the trend. But the next one is the 0382, and here it is again, that we have a 38.2% chance. It is a popular entry point, yes, but it is not always valid, as we still have a low percentage chance of being rejected here. At the 05 level, which is not an official Fibonacci level, yes, there. It is more likely that we have reversals, but often it is the case here, yes, at the 05 level, that we bounce a little and go a bit above, and it never really runs very cleanly, yes. Next, the next one is the most interesting, and you should remember it. The 0618. Yes, when the price goes up here, and this is the most exciting point, this is really the golden ratio, or rather the middle 0.65, is the golden pocket. And this price range between these two things is so often, yes, taken as the actual last point in a downtrend for us to then continue the trend movement downwards. And we will see this now in the chart, no matter the time frame, that this happens here the most. And in trading, yes, at least my recommendation is that this is the level one should focus on. Because this is where the fewest fake outs occur, the strong ones, yes, that might hit our stop loss. And the rejections are very often almost perfect at this level. I think at 0786, I don't need to tell you, yes, this is a very, very deep retracement in this case. It is not given much attention because we have the rejection here. But if that happens, then this could still be our last percentage, where we are rejected, at 78.6%. And at 100%, our old high is simply reached and we no longer need that. You can imagine that now. These numbers, you now have numbers in your head, yes? 0, 5 means 50%. And from the point where we have over a 50% chance of rejection, exactly the first point, is where the rejections or also support mostly occur. I will now briefly show you how I created my Fibonacci. I actually need all the overarching levels that we then continue. Yes, beyond the 1 or beyond the... So if we go beyond here, I don't need these levels. Take a screenshot here, yes, maybe. Set it up so that you can see what I have in here, and we will also see how it looks in the chart. So I have now prepared two charts. One is the Ethereum 4-hour chart, and the other is the Ethereum daily chart. And I want to show you now how valid it is, just so you can learn about the validity of a Fibonacci retracement, how well it actually works, so you can see how it looks here. And you can't even imagine in the daily chart how perfectly it actually worked. We simply take this current bull market from the low to our high, or even to this high. Both times, these are the same highs. So you can see where you might calculate if we go down and dump, right? Where can the price find support? And we start here now. Yes, quite wildly, just bear market, low to all-time high or to the next high. That came before the correction was there. And you see, yes, the first rejection was at 0382. That's what is very often traded. Now in the long-term trend, this worked out great here. But actually, this massive dump that we got afterwards, yes, which just washed everything out of the market, stopped directly, and you can't make this up, sorry, just at 0, 6, 1, 8, then corrected. We see the next dump, which again washed everything out here, again in the area of 0,618, yes. Currently, and it doesn't look good, we see the 0,618 more as resistance. That means 0,786, yes, would now be a possibility here as the last possible support. That's around 1,570, yes, for Ethereum, should it really happen that we go further down. But just so you see, you really can't imagine it. We can also keep looking, right? Let's continue counting in this case. Let's go into this here, right? Let's look at the next low we had here. That was actually our bear market low here, but before that there was an all-time high, which was a very, very long time ago. And that's what I mean. These are price zones. You can't imagine. After this thing, we got wrapped into here. Yes, a little recovery above it. Then support, 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 and more support. And it actually initiated the bull market here again. And that's what I mean. Yes, with. If we now take the daily chart and overall all time, yes, history, how valid these levels have already been, indeed occurred. Similarly, let's take a look here at a 1 minute chart and go through the 1 minute chart a bit because it is very, very similar here. And you will see this right away when I show you what I mean by that. Whether it's a day over the long term or if I take a quick look at the 1 minute chart and look for swing highs and swing lows, whether they are in a smaller format or a larger format, yes, you can say that you really take a long time frame. Or for a small scalp, how valid these Fibonacci retracements are in detail. And for example here, yes, we are in a downtrend, have a small correction, are back in a downtrend, have broken this here, and I now see for myself, okay, I want to look at this swing high to this swing low after we started correcting here. I want to see, okay, where could we have Fibonacci levels here? And that's why I mean, yes, 0,618 is the best level for me to trade. Of course, you can also do 0.5 and 0.382. You have to incorporate much more market understanding here because 0.382, if we had our last low here, might not be ideal to short immediately. But with market understanding, you could say 0.5 could already be tested. But if you really want to have a good trade that is truly perfect, and you see it here again, 0.618 was tested, and then it went down again. This now, as this example. Now we move on. We are looking for a small second example. We will also look into 4-hour charts so that we have another opportunity where we can look into. We could, for example, take another look. What else do we have here? Well, here, for example, we had an uptrend here, a massive correction. And we could check overall if this is an up. No, there was a trend reversal here with a liquidity move. But we can see if this tells us something. Yes, of course, not everyone is perfect. That means actually I want from this swing high to this swing low. Exactly. And you see here, look at this low. Look at this high. What happened? Again, the 0.618 was a perfect example. Of course, in live trading, you always have to look, yes, where are our last ones? So low to high, you can do that quickly, then we correct. And somewhere in this price range, you can then say, I can now draw my Fibonacci, yes, if we consolidate here. Because what happens? When the price goes over, then you just pull the Fibonacci a little bit behind, and that can happen regularly. So you see, from a daily chart, we go into a minute chart, and it is very, very similar. Now let's look at the 4-hour chart. When we go into the 4-hour chart here, and these are now the old ones that I still have in there. You actually see how small it was down there. But let's assume now that we have initiated a correction of over 50% with Ethereum, which is not very, very nice. But you want to participate in this correction as best as possible, yes, so that you have really good entries. And look, where do I find that I can take advantage of this trend continuation? Of course, we always have the possibility that we have highs, which we can test again if you have a bit of market understanding. But you will never know exactly when they will come, and the Fibonacci can be an incredible help for you. Just a visual representation. We have a high here, we have the swing low here. Let's pull this over here. I think I don't even need to say overall, you can immediately see again, the perfect one would have been the 0.6 weight. And we are down here. So after this candle here, it's the first opportunity to use the Fibonacci retracement levels for yourself. You just have to look here. Where could I get rejections? The chance here at 0.382 is not that small. We had a low here. We had a low here. These were our highs. You could already test this. Short a little here. Yes, maybe to the next retracement level. I have to be careful, of course. That means here I might not necessarily enter with limit orders and let it run, but rather if I see a rejection here, I would enter a short, find a stop loss at the next candle high, yes, and then trade it into the next Fibonacci retracement. But overall, you can see here again, 6, 1, 8 to 0.65, yes. So in this case, it predicted the massive momentum in between again. When does the Fibonacci become invalid? In this case now with the downtrend, if we have it, if we fall below the last low, we had. That means we can actually draw a new Fibonacci retracement here. From here, from this swing high to this swing low. I think I don't need to say here how strongly the 0.618 or 61.8% probability of rejection worked here. You could have taken so many trades here, yes. Or if you say no, you believe we are going significantly further down, you can pull your stop loss into profit as soon as it goes down and then try to re-enter. Doesn't work again, pull it into profit again, yes. And at some point, as it has happened now, yes, it has gone down significantly. Of course, this is not the best solution because it was over a longer period. But what could have been done? One could have simply regularly shorted this price range, at least the 3.6% to the next price range. Then it would have happened once, twice, 3 times, 4 times, 5 times, 6 times that you could have traded in this price range. Yes, with 3.74% as a small example. Yes, if you only do short-term day trades and have taken advantage of it 6 times with a certain leverage, that's of course incredible. And that's how you can use it for yourself, yes. You have seen it now. How, once again, in conclusion, how do we draw this in? It's essential to know. We need to have a trend confirmation. We don't just do this anywhere in a sideways trend. Of course, you can try, yes, to draw something in here a little bit. We can test this very briefly here, for example. That was a low, that was a high, yes. It also has rejection again. You can even see it in this wonderful sideways trend. There was our high, there was our low. If we mark that precisely, and again, our perfect rejection actually occurred after the high happened. You have to calculate everything there. Wonderful rejection, yes. And we tested the price area several times here before it then went up. Yes. Although we were in a sideways trend now, so to speak, yes, or have not yet confirmed a bullish trend. But that means we want, yes, to get into a trend, just so you understand that again. We want to get into a downward trend. If we have one, the market goes down. Then we look for entries. With these lows and highs, where we can get back in to continue this trend. That means we draw our Fibonacci just in a downtrend from top to bottom. Again, a perfect example here, huh? Because we are seeing it right now. Actually incredible. From this high, we went to this low. What happened after that? Rejection, 0.618, and it goes down again, huh? Or that's the second possibility we have. We are in an uptrend, and then we draw from a low to a high. Yes, you have to look for where these lows and highs are and draw various Fibonacci's there. We could now, for example, look here. Yes, that went up to the 0.786. If we look at this now, this low to this high, but overall, we are in an uptrend and I want to use this correction here. Yes, to enter here. Then you could have done something here at the 0.786. That means you would have incurred a stop loss here if you were trading it. After that here, a possible next long order, and that really worked out. And that's how you have to proceed. Yes, pull on a rising price from bottom to top, pull on a falling price from top to bottom. Calculate all of this with percentages instead of these numbers, then you can use your probability for the trend reversal to your advantage. I hope the video was helpful for you. Leave me a like, leave a comment. I would really appreciate it, and if you haven't subscribed to the channel yet, it would be awesome if you do that and even activate the bell. Because I trade live regularly, and you can join in and also see how I do live analyses and use the Fibonacci, but also many other things. Until next time, bye-bye.